Hey there, good morning. Well. It is Friday. And we did have that shake and bake that I was expecting yesterday, which is to say, all right, remember this puppy here? Oops, sorry, many lines. It's a little disconcerting, but here's your week, here's your day, here's your hourly. So yesterday, if you recall, I said, okay, it makes a lot of sense, right? We come in here, we open at 54.05, so close to my 53.75.95, but no cigar. And I could see we started getting some call buying and the like for a bounce. I said, wouldn't surprise me if we come back up here and tag the 3-day. Intraday, you can see my 7 and 17. We did exactly that. So we did a pretty good push. And then it got firmly rejected and rolled right back over to this 5,400 before we closed, but that is not 53.75.95. So anyway, long story short, this is still working from my warning on the July 9th, 10th that we had a massive 56.50 resistance zone. And every time we got up there, we just really had a tough time getting and staying above until we gapped down. And that was it. Game was up. And we continued lower. And yes, I know the CPI, negative print and all that stuff helped. But we have some gaps that we're going to fill when we rally, right? And I do mean stop going down. And I can see one more high. In other words, this is clearly a high and it formed a nice kind of head and shoulders. But I also did measured move yesterday or the day before, whatever, in the Qs, which also worked really well. Timing is everything, right? But Fib helped identify. And then, of course, we opened, which was very important on this week after a doji to form a potential evening star reversal, which I had been looking for, as you know. So this absolutely worked. Price target hit. We bounced, couldn't get above. We trounced. But on the daily, the same idea, exact same idea, where I felt we were, when we opened on Wednesday, we were really going to come down and tag that 468. That happened. Obviously, it was a trending lower day of size. Same thing with SPX. We opened below that key level, which was 55.05, and it's hard to see, but it was way the heck up here. Remember that? I said, oh my God, we actually opened below 55.05. That's very bearish. Anyway, long story short, with this measured move, left shoulder, head, right shoulder, even if it was in a hurry, it is 449. So even though it's not in pink, whatever. The point is, it's 449. It's 449. Also, all the prior kind of distribution in March before the April swoon. So I'm pretty comfortable and confident that we're going to go down and tag that 449. Obviously, we're getting a little bounce this morning, but that's not such a surprise either. Look where we bounced yesterday with precision. We tagged my 445.58. I didn't put that there. That was there. That was just there since June. Anyway, that is a support level. We bounced all the way up and through this 3-day, right up into resistance. Exactly another support level, which had been a prior price target. So all we're doing is working through all my price targets with bounces in between. And I'm looking at the big picture saying, we're still going to head down to that 449. The heck is that noise? All right, so I still have two price targets in mind, 449, as discussed yesterday, and 5376. Let's call it that. So nothing has changed. Absolutely nothing has changed. Then, you know, I'm also kind of shimmying over here to this lovely stock, growth value rotation ratio. And I've really just been super impressed from July 9th and 10th when I warned and this was the highlighted area, which is basically November 2021 highs. This is what happened in May and June, and then of course July has a different feel for it. Selling picked up, by the way, when I was in this neck of the woods. I said I could see earnings season being a little calm with a swoon in August and September. We got the swoon way early. So I think this is all part and parcel of Fed really needs lots of reasons to cut. So I don't think they're going to have a surprise at FOMC, but they're definitely going to go in September. That's been a baseline bet. Now odds are increasing for not 25 basis points, but 50. We'll see how that goes. Anyway, long story short, we made it all the way down to this 1.95 ratio, which I had already wrote was my baseline bet and area. I would expect a bounce coming in, but I'm still needing for conviction to go make that high. I need this to stop going down. So we're going to need some bounces. This morning isn't strong enough. We probably get the VIX crush on FOMC next Wednesday. We'll go look at VIX too. And PCE wasn't enough to do it this morning. So here's what I'm looking for this to base before we can actually move higher and make what I call one more high, because I really do think that this is a distributive top. I know I've talked about this, before, but this whole kind of structure with the dollar stronger, relatively speaking, and the concentration risk coming out of the very, very overinflated SPY NASDAQ 100 and the very deflated value. This just to me is reversion to the mean, but it's a little bit different than simple rotation growth to value. I think it's a lot different actually. So when I look at the charts, I'm always looking for tells, and my big one of that RSP to SPY, which I've shown oftentimes. That is just a huge reversion to the mean in the works, in my humble opinion. That's going to be the rest of the year. So let me explain that for a second. Hold on. No, I'm not. 10-year end of summer call still in play. Absolutely. All right, I'll have to do that later. All right, so sorry, I got a little interruption, but let me just show you this because I think it really matters to this whole thesis that I've got going on here. All right, remember in my market thoughts, I've shown you this for weeks now. This is that RSP to SPY, wicked oversold. RSP to SPY, relatively speaking, took out 2020 lows, 2009 lows, 2003 lows. I mean, took all of those out. So we're having a reversion to the mean in value, and we're having some distribution in, growth, but specifically concentration growth. I think there's a lot more room. So for me, this is not a simple growth to value rotation. There are going to be a lot of hits in value. It's really stock picking paradise right now. Know what you own. And stuff like BMY this morning is coming up off the ground. Just case in point for how earnings are kind of doing, right? So BMY, look at this thing this morning, finally coming up off the ground. Drug manufacturers, have been coming up off the ground as a kind of a sector within XLV. You also have 3M this morning, and they all have good reasons. But my point is, look at this, beautiful. What was price target? 112. Remember that on a monthly? Check this out. I mean, this has been in play for a while. Oversold, value, left for dead, however you want to put it. Look at this gorgeous inverse head and shoulder on a monthly. All I needed to do was get above 92.52, digest that 101, and I know clients are still patiently long. I've got no edge with earnings. All I have is price targets that say, hey, this is working. Look at this beautiful 10 and 21 crossover. Look at this consolidation. Consolidating meaning the sellers, and they're winning. It's always an auction of buyers and sellers. And now we're at 112. This is where we're going for. Be careful here. This is where we also get a lot of digestion. Above 112, you got a whole new channel. It's beautiful. So my point is, I think there's a lot of stuff that's just wicked, wicked oversold and wicked, wicked overbought. But that $1 trillion in market cap that we lost in one day, remember when SPY made our negative 2% finally after 356 days and Qs were down 3.5%? That was 1 trillion. That's the entire market cap of the Russell 2000. That's the entire market cap. It's more, right? There's no way that that money rolled into small caps. No, it just left. Some of that money went there for sure. Some of that money was hedge fund short covering, but most of it just left. Will they come back in when the coast is clear? Maybe, but I think it's going to be a bull trap. Make a sense? And I'm also looking for triggers that can force this unwind a little bit faster. Unemployment rate above 4.2%, 10-year below 4.2% and staying there, and the 2-year yield falling below 4.2%. So anyway, long story short, I just wanted to kind of go over that. I'm still sticking to my guns that this is actually more of a distributive top. But this morning, what we have, more earnings, PCE, which is in line, no issues, but not today. Like today, let me just hit this here. Today we have, there we go. I just posted, a little bit of this, which is PCE, fine, dandy, 2.6%. But a bigger issue is savings rate is falling. Why does that matter? Right? Literally back to the partial lows before that big, huge stimulus that we got in October of 2022 with Fed, Treasury, Bank of Japan, Bank of China, PBOC, Swiss National Bank, all kinds of money came in to the market. Point is, this has come all the way back down. Personal spending, why does that matter? Or personal savings, because they're using this to spend. They're using this to live. They're using this to self-fund. That contributes to slowdown in growth, in my humble opinion. And I really liked, also Connor sums it up. Even though economy is not falling apart, thank goodness, right? We don't have that kind of recession vibe. Financial conditions are definitely tight. Loan growth is very low. Jeffrey keeps talking about that. We know existing home sales are very low. And by the way, I still see the 30-year falling, and that's very, very helpful for a warm summer housing market call, but it's not going to be like a big gangbuster refi cycle, but it is going to trigger refi. What are they refinancing for? It's certainly not for lower rates relative to what they have. It's for money. It's to get money because they need it. Automakers, we know, are struggling. Hiring is absolutely tepid. That balance of supply demand, therefore wages are not spiking higher. Anyway, we have very, very low volumes in M&A, IPO, all that stuff. So it's compelling evidence that financial conditions are tight and why I still believe the Fed will cut. Okay. Other news really is, incomes are falling and, credit card delinquencies are rising and all that kind of stuff. But for the most part, I still see that this is a rotation that means distributive top versus your typical, oh, we're just going to go into value now and, growth is done. No, I think as soon as we see banks suffering, the market is done. Market right now is buying up stupidly priced, I'm sorry, that's a strong opinion, but stupidly priced banking, right? So banks right here, which is a big contributing factor to the small cap move, is dangerous. You really need to know what you own if you're buying KRE. So I would say that this is going to obviously trap some bulls as we move higher, both in small caps and in growth. And then we're going to get a reversal lower. So that's it. In the meantime, hit me up in Zoom Q&A if you have any questions about anything, and I'll size it up. But for right now, I think we've got some let's see, DXCM, Alexander is mentioning getting hit, weight loss component have right there on the ground. Yesterday we had VKTX, beautiful follow through in their earnings. No edge, but man, that had been digesting. Looked like it wanted to do exactly that. Needs to stay above 60-30, but there's your 21. And there's that literally price target of 70, which was the mean. In other words, this is, beautiful. Just needs to get now stay above 60-30 and really spike above 70. We got kind of M&A back in town. I did a podcast yesterday, and it kind of has more of my negative bent that I just kind of described. It does indeed. It's very focused on recession risk, actually. And I haven't talked about recession ever with you. So, yeah, oil's a little weak, but dollar is firm. Yields are a little soft, but not falling apart. At some point, we've got this, these gap fills, but not today. And the steepening has continued. We'll see if we get a fake breakout fast failure, but right now it is continuing. And Bitcoin is also continuing to look a little soggy to me. And it has, right here, support, little support. Look at that tag, perfect tag. This thing is so technical, it's amazing. Anyway, there's just not a lot of energy. What I'm looking for is the same thing I've been talking about, which is those two levels in Q and SPY to tag, and then my growth value rotation to start to move higher. We get we get a rotation back in growth, value stays fine, and we just watch banks really carefully. Oops, where the heck is my Qs? Sorry, there it is. All right, so we had a big bounce in the Qs. And, data. My data gets corrupted so often. It's so frustrating. All right, and this was a fabulous tell yesterday. And by the way, we tagged, and I mentioned before I closed my room, this was it. So remember, we bounced and then we came right back down. Well, I'm gonna have to close this and open it back up. Hey, congratulations on your SPXS calls, 107%. Very nice. Very nice. And that's a trade. Yeah, yesterday was basically expect, shake, and bake. I don't think we're done going down. So, and long term for small caps, technically speaking, let me get my chart back up. And KRE, yes. I did a big thing yesterday, 2 days ago on Tesla and WMB. Okay. First, let's start with WMB, Conrad, because I was actually writing that up for you. This has been a fabulous, move higher on the weekly. Very boring trend trade, but then it hit monthly resistance and came back in, which is not such a big surprise. So you really have to kind of respect monthly. Monthly is right here. It held. This is weekly. Anyway, it digested the monthly, went sideways, broke out higher, came back in, but this is profit taking. Do I think it's going to get above there in time? Probably. But for right now, that is a very big bearish engulfing, and it came right back down to the 10-week, which is where it needs to obviously close above for this to be kind of digesting and move higher. Here is where I would more likely expect it to go now that it has done this kind of shake and bake. In other words, tag your it, that's a price target, even got a little above it and then came back down. So I don't think that this is a bad trend, but I think this is now getting, hit. I don't even know if it had, no, it doesn't have, earnings are on the 5th. Whatever the reason it's getting hit, I honestly didn't look at it. This is a bearish engulfing. So respect that it could come back down to 40.76. Yes, it is distribution. I don't think it's too bad. KRE is the reason for the season, right? Short covering is just powerful. It's just powerful, man. And this is what's really contributing to IWM doing so well. And when I look at all of my indicators that are kind of supportive of advanced decline of the overall market, it's still moving higher, which is either the new highs that are coming in, right? In NYSE and small caps. We've even taken out the prior April highs before the swoon. Anyway, point is, it's firm. So we're having that broadening, but it's mostly in small caps, which we already know, getting. No, I think that's getting extended. Yeah, I think that's getting a little extended. And then we have a little bounce this morning in FANG stocks. A little bounce this morning in FANG stock. So this is a level of support bounce. How we're opening up looks a little bullish. Let me just do something real quick. To break that, we're heading lower. And you can see we bounced perfectly on that 455, rate sitting on 860. And here we really, literally, look at this, 460 and a half. Tag came right back in. Find me something else. Let's go Tesla, right? So Tesla, I don't know if you were here when this puppy announced, but this was Wednesday. And on Wednesday, we opened at 226 area. And I said, I am very, very fond of this 217.65. That's where we're headed. We actually hit it on Wednesday and then bounced. And we're kind of digesting. I don't know if you can see this structure, but we're digesting this 217 and a half, 217.65. Then I said, but I really, really like 212 into this. 212 is the 10-week. Into the 208.71 and potentially even all the way down into 200. So I'm very bearish on Tesla. I don't think this is a bounce candidate yet at all. So anything below this 217.65, really, really, I don't like that particular one. That's better. Yeah. This prior high of January 2024, you can see the 217.80. This was a gorgeous inverse head and shoulders, and all of that measured move has already taken place, right? We went all the way back up to this 265. This is now unwinding, and it is potentially very bearish. Why? Because it fell back below that trend line from the November, 2021 high. Above is very bullish, but below it, it ain't. It just ain't. And it's an evening star reversal within a potential cradle formation. Basically, it just looks terrible. Horrible, awful, not good. So intraday, it doesn't thrill me. Like, I don't have a particular bent for it. I would say, obviously, we break that 216. We're going to roll over pretty quickly. There's lots of support here at that 200. So this could take a little while. But you can see the 206 on the hourly is about the 200 day. Yeah. Just doesn't appeal to me as a long, even if the market right now is having a wee bounce. I still see 449. In fact, I'm going to put that in some kind of bright color just to kind of, there we go. Measured move is 449. IWM. Sorry about that. All right, anything above 212.25 is absolutely gold, and I've got a price target up here of 227. Yeah, this is too funny. I see early buys of September 225 calls, 14,000 of them at $8.50. Look at that. So they're already coming in for September. Look at this is the lead of what's coming in today. So they just came in, but it's not the biggest one. The biggest ones are chasing it, right? There's what's getting chased for this week. There's positioning of size. Here's your trend line. It's kind of, not perfect, but it came into the 8-day, held, kind of like just digesting this trend line. But the next level I have for this channel, once above, it's an if then, is 227. All right. So I already mentioned this is very, very, very bullish. 3M had an inverse head and shoulder on a monthly. It did a fabulous job of digesting 101. Why do I say that? Because it took forever. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, but it never closed below the 10-week. That's just power. Now it did just tag 120. And I know a few of you are long on this patiently. Just be careful. That's 120 is the 400 week, and this is monthly. Wouldn't surprise me if some folks look at this and go and get a little case of vertigo. But I think a bigger picture, this is a very, very, like, ignore all these like strange, did they do a split at some point? Anyway, that's going to have to digest that 112. Just be careful. Sorry. Google continues to be weak. Remember, there's this search GBT that came out yesterday that kind of upset that potential. It was starting to move higher, right? And I'm like, yeah, no, it's got too much baggage. Look at this. This is a very nice bearish Harami as a warning. A lovely pull down to the 10-week. A bounce right above the Keltner channel that got rejected. And this 10 is rolling over. Has this trend broken? Believe it or not, no. This is just a reversion to the mean so far. Just a reversion to the mean. So this is a great place for some profit taking. I wouldn't be surprised at all. Look at that cradle formation, gorgeous. Ah, this is just beautiful. That was huge because it gapped below the 55. And you know how I feel about that? That's just press. If it gaps below the 55, just press. Anyway, this is now a little bit of support. Yeah, same thing. CMG, that has come down into some support area. It's hard to press down here. Seriously. Wing hasn't rolled over yet. Yeah, the yen is still pretty bid. It's actually pretty darn impressive. TLT moving higher. 10-year breaking 4.2, but only by a hair. I think it's going to pick up. I don't know why I am so, oops, sorry, that's not what I wanted. Totally fixated on this falling, because I think it's really going to pick up speed once it comes back, breaks down into here. I think the Fed is just forced. They're going to just have to cut. I know I'm very unpopular in that call, but that's what I feel is going to happen. And so far, I don't have a case against it. So in my mind, all right. So we talked about Google hitting some key levels. 3M, all I can say is congrats. BMY, that was I think you did something with that, didn't you? I think, Tim, you were like bottom fishing. I'm like, I don't know. So anyway, 3M I was really comfortable with, but BMY not so much. VKTX is digesting very, very nicely. This Novavax is also gorgeous. Remember, it had a huge infusion of money. I forget by whom, bird flu, something. This is all Alexander, early and right. And it pulled back to the 10-week. Look at this thing. Looks still very, very good. This cut in half, Celsius, Lulu cut in half. Just trying to see if there's any short covering going on this morning. Not really. RCL is forming an evening star reversal. I mentioned that yesterday. That looks like a potential for lower. Waste Management Company, Waste Connection, also forming an evening star reversal. Waste Management already had this happen. And by the way, I mentioned this was a ridiculous momentum. It was treated like a momentum player and did not deserve the valuations up here. And clearly it's catching down. And that's what I still think is going to happen with a lot of the concentration risk in the Qs. I think it's going to have a really tough time. Taking out those highs. I'm definitely. I think one more high and we're done for this cycle. PDD is now below the 200, heading finally to the 126.75. Man, oh man, that took a while, huh? So lower high, date with the 200, but then I specifically said 126.75, almost there. K-Web breaking down. Baidu was a quick rejection, right? Baba is next, coming into that 70. I'm really very patient when it comes to these patterns. Really patient. I know folks get very excited and they glom on, and then that's exactly what I'm like, nope, this is not going to work. It's just, it can't sustain itself. It's got way too much work to do. It has many miles to go before that 200-day can flatten and start to move higher. People are in a big old hurry. All right, so that's showing a little bit of promise. It definitely is rounding, but it got support. So BXM is a really great tell for direction, but also intensity. Does not do anything about duration. Doesn't help me with timing at all, but it definitely shows me direction and intensity. So you can see what happened in April was a massive breach, and it was very intense. And then it got defended, and once it took off the high, it's just bullish. It just is. Let me get rid of this for a second. Hold on. All right. So this was the warning. Remember on 4-4, I saw that big breach right here. I said, careful. 523 was NVIDIA earnings, but 4-4 was over here. Sorry. That was it right here. So that was 4-4. I'm like, careful. We're going to fall. And then we had a massive breach. Okay. And then that was it was too extended. It was too dramatic. It popped right back up like a ball underwater. Okay. And then once it took off the highs, which was literally perfect support right here, 55-day, Bollinger Band. My God, look at the squeeze. Anyway, there's lots of levels of support. Boom, it moved higher. This is really different. This structure is distribution. This is very, bearish engulfing. This is even a bigger bearish engulfing. This is liquidation. This is distribution. This is going to pop and then drop and then pop and then drop. It's going to take a while, but this looks very, one more high. We could clear and come all the way back up here, and I'm still going to be bearish. I don't think we're going to take this out. In other words, I think we've seen the high. But I want to time the bounce into that high. That's what I'm focused on right now. Shorts have worked, right? Crushed it, just crushed it. But now I want to time a bounce. And I don't think we're going to until after FOMC. Let's go take a look at VIX. We hit that 1060, which I don't believe it actually hit that. That must have been some kind of, but it's still there. Isn't that ironic? Anyway, we did this perfect support, 1449. We moved higher. We came back in, we're just sitting. Remember I said yesterday, it wouldn't surprise me if we came down into this trend line. Here's my 7 and 17. Kind of equally balanced. We did hit 1929 and came back. We did hit 1870 and we came back. I don't think we're done going up. No, I don't think we're done going up. I think we're going to hit 20 and that'll probably be in time for FOMC and we'll get that FOMC crush or the QRA crush. Remember, we've got FOMC on the 31st and we've got Yellen's Yahtzee, right? She comes out with a quarterly refinancing announcement. Today, we're kind of coasting here. Wow. Wow. That is so strong. Seriously. Congrats. It is still the 400 week though. Right here is that 400. So literally 119.58 issue area, 120. Let's see if I have any other levels on my chart. Yeah, 120.40. 120.40. Congratulations. You held. Patience, patience. All right, GBTC still hasn't fallen apart. Tesla hasn't fallen apart. Cars doing fine. ICE is doing fine. Baidu's doing awesome. I mean, Gilead is doing awesome. I think that's just hysterical. Eli Lilly is still in distribution right back down to here, which is 800. I don't think this one's done either. I don't think this one's done either. Google can't even hold support. This is just liquidation. I'm sorry. I don't think this is rotation. And the yen is way too strong. Yen is way too strong. Oh, IBM? What a beat yesterday. Beautiful. We're already down 0.5% since the bounce. I mean, look at the 3-day. We give up that 460, we just roll right over. But it might not be until next week. That's the tough thing. Usually these big moves, which we've had for, a few weeks now, end on a Friday. This one doesn't look like it's done. Or the energy ends on a Friday. Monday, you get your final move, and then you get your turnaround Tuesday. And maybe the market has that in mind, honestly. This definitely did not feel like April. Remember April when I said we're done on the Friday? Monday, we're going to move higher, turn around Tuesday. It worked with precision. It was awesome. It doesn't feel like that. This one right here, that was just gorgeous. We literally ended on a Friday, 419. So that's it, we're done. It was gorgeous. Sure enough, we moved higher on Tuesday, but this doesn't feel the same. Stabilizing though, definitely stabilizing today anyway. I cannot believe how Gilead has done. I mean, LOL, right? Widowmaker, strangely loved this one. Loved this bear trap on, just crazy. Where does it end? It's not done yet. It's really not done yet. It looks so strong. It's going to digest here a little bit and then move into this 79.61. If you're still into this, it's pull back. I'm going to do this. Hold on. Yeah, 79 area looks to be where it should see some heavy digestion. All right, so the 225s, I already showed you those. We're getting bought aggressively, both the weeklies as well as positioning. That's working. XBI is, of course, very beneficial, benefits from lower yields and rotation. Got some oversold bounces. They don't look, like they want to fall apart. Marvell got right back above the 200, right back above this monthly, which is key. Unfortunately, it's also distribution if it fails. Hats off on the BMY. Just remember, that is a descending 200. Careful. 3M, I mean, oh my God. 120.40. Just awesome. All right, so we have a little bit of a Bitcoin bounce. Everyone's excited. I don't see any benefit though until it can get and stay above 70,000. We have a little growth stabilization, but not anywhere near as positive as small caps, regional banks, 3M. Just who would have thunk it, right? You know what's interesting? This is interesting to me. Wow. I have that scan every single day. This is all US stocks, indices, and ETFs. Nothing is showing up. So we have a lot of oversold bounces. We know that. We have a lot of de-risking in the concentration tech space. Nothing is showing as a strong trend. Wow. That's different. I haven't seen that in a long time. We're going to come back to the 8-day. We're going to come back to the 8-day. We haven't even come back to the 8-day. All right, so here's that trend line from November for SVXY, which is really inverse VIX. Here's that pull down on just kind of a fib level. We did 100% retracement. We have a little bounce. There's no energy here. I wouldn't be surprised if we have one more hit. I'd say one more hit lower before we have a durable bounce that I actually like trust. Very, very interesting. Very interesting. What I'm commenting, what I'm observing is that we don't have any sizable buying going on. But breadth in oversold plays is still very firm. Breadth overall today is pretty firm, honestly. That is such a reversal pattern. Yeah. Costco, we're really, they're still de-risking. In other words, if you own Costco long, there's no reason not to protect. This is the vibe, right? Google, they're still not bidding this up. And it's really, so they're really still de-risking. That's what I'm, sizing up anyway. Amazon's a little green on support. And for how long is the question? Microsoft, oops, where are my levels here? All the way from February, man. That is just, oof. All right. Valaro yesterday was really explosive. Now it's kind of digesting. Looks fine. All right, so not still, I'm really impressed that we're not doing anything today. That's number one. I still see BABA heading down to 70 area. I still don't trust Tesla. I definitely don't see anyone coming in to bid up Google. It's not ready. Apple is, remaining in distribution to 210. We got a little stay of execution here, but it hasn't even reverted to its mean at 10-week, right? We have some outperformers, without a doubt, whether it be BMY from way oversold to now, wow, to my Gilead, to my affectionately long Widowmaker, takes one to know one. And then you got, bizarre beat, not bizarre, but long overdue beat in 3M, just exploding higher, beautiful, long time in coming, etc. So oversold, skyrockets, oversold, skyrockets, oversold, skyrockets. FANG stocks, not so much. Not so much. Netflix can't get going. Yeah, that's what I see. More of the same. Weakness. Up 1.7, but down 1.7 since the open. That's it. No big moves here in VIX. Soggy, but not falling apart. I remember that level, where was that in yellow? Was it SPY or I have this one. There it is. Remember SPY from the November low, right? Tag. This was all that April tag. And we did a fib retracement of 100%. We're bouncing into the 3-day. I don't trust it. I still think we're head down to 535, but maybe not today. Anyway, the point is, this is the trend line all the way to November that I shared a few days with you, a few days ago. We did tag it. We bounced, and that was my expectation. Wouldn't surprise me, but then we're going to trounce. We did that. Now we've gapped above it. Is that going to hold? Looks pretty impressive, huh? Like, look at that. Is that going to hold? Is that what you need to buy? In other words, does this give you enough confidence to buy? We broke it. We came back above it. Two weeks. 2 weeks. I don't think it's done. I know. I want it to be done too, because it's really, really easy to go, okay, we're done. Let's go fill that gap, right? Let's go position for that gap. Let's go position for that gap. I don't think it's done. I just don't think it's done. Uh-huh. Yep. All right. What else? But Gilead looks good. All right, let's see what else. I didn't have anything here. I had some intermarket I wanted to show you. And let me answer a few more questions. Dollar's hanging in there in that channel. Gold is trying to have a little bit of a bounce. We know what's happening with the market. Soggy sideways. 10-year hasn't busted the 4.2 level. And we get non-farm payrolls next Friday. Maybe we break the 4.2 unemployment rate. Don't know. That's a gap. Shake and bake. Yeah, we have not busted down below that 54.19. Next time we break 54.19, I would say we're going to head pretty quickly into that 53.76 area. Q's are weak sauce. Again, remember this big yellow line? That was price target. We sliced right through it. Check this out. I'm going to do a daily. Ooh, that's not what I wanted. There we go. All right, so this from May rolled over, and then when we broke above this yellow, it's very, very bullish. Remember that? I was like, if we get this, June is going to take off whenever we get above this yellow, which is very key because that was the NVIDIA high. We rolled over. Once we got back above the NVIDIA high, the 523 high, which actually was on June 5th, it's hot fire flames. Look at this. We've come all the way back down to the NVIDIA high. That is a massive amount of market cap. And it's having a really tough time holding it. They've already put back 3 cuts by year end in the Fed funds. Yep. 85% probability of 4 cuts by January of 2025. That's how quickly it changes. Yeah, oil is weak. Yen is strong. Keep that in the back of your mind. Yen is strong. Market's trying to bounce. But the weekly has a lot of pressure on it. We haven't really moved. No alerts. And no trend, no trends. Like, wow, that's impressive. Yeah, we came all the way down with NVIDIA. Came all the way back to the May highs. It's trying. But that 106.53 was price target. It tagged beautifully. That was a gap fill. We do have a few other gaps up here when we turn and move higher. If you're bullish on NVIDIA, get it back above 116.5 in order for it to move back into that gap fill. So far, it's trying, but it's not there yet. It's got to get above 116.5 to really be bullish. We haven't even, look at this, we haven't even bounced yet. VIX has not gotten crushed and growth has not bounced. And I have no trends appearing on my scan, even though I can see, you know, like Baker Hughes looks better. Obviously, Gilead is an oversold bounce, so that's not the same thing. I have no breakouts. No, this is really odd. Like I usually have between 15 and 45 strong trends, which helps me identify strong sectors. I've got nothing all day long. This isn't, I've never seen that before. Really weird. All right, anyway, let me go through a few questions and I want to do a little bit of intermarket analysis. Good job on your puts, weekly or monthlies. Good job on your 3M. I think that's, you know, digestion. Good job in staying long the small caps. Just let's go to the monthly. Where the heck is it? Oh, there's 227. We'll see, but it's still so far still bid. Just keep in mind KRE is the reason for the season. And I don't even have a level on KRE. It's so, broken. It really is broken. Let's see what I can find here. No, let's go over here. I've got 59.83. Ugh, such a crappy little. Yeah, all right. So this is the fall from grace, right? That was the March drama. So 61.37 to be exact would be price target on KRE. It's not very far above. We get above this 61.37, we can head back in to the 2021 high area, but you're really, I can't think of a sector that I would want to own less of. Seriously. I can only use it as like a guide to say, okay, we did a great breakout. Yields are coming down, all the unrealized treasury losses, yada, yada. But I don't see any reason to own this sector. That's me. But I can see it clearly coming back into the mean and then getting above 61.37. If it gets above, it can push a little bit more. Remember, there's a lot of short covering in here. I wish I liked it. I really don't. I like XLP for safety, XAR for defense contractors. Was it another company just did a stock buyback within this space? Tiffany knows it. What the heck is it? Oh, NOC. Yeah. NOC at Northrop just did a buyback announcement. Look at that coming up off the bottom. RTX, beautiful breakout, scoop breakout higher. So there's a lot going on within a XAR, even though it includes JETS, which I'm not crazy about. XLP is fine. XLU is fine. XLV is still right now the best. We already talked about DXCM done. BMY looks capped out or tapped out at the 200-day. Tesla just looks like a short to me, or short the rip to me, I should say. We talked about WMB, we talked about Qs. Oh, target areas, I think I did, right? Maybe I didn't. This number 2, yeah, there it is. We're sitting on my price target. We overshot and we're sitting here. So where would I think we get a bounce? It'd be right to the top of this kind of Keltner channel. I just want to see something where it shows up. 54.78. I don't want to put it there, but I want to see 54. That's way too high. Hold on. Keltner, top 54.78. 54.78. So 54.78 is this Keltner channel. 54.78. 54.79 is right here. So yeah, it wouldn't surprise me if we got going and we tapped this level. What's really so far pretty telling is that we couldn't get above the 3-day. Right now it's trying to get above the 3-day. So this 8-day is going to come down to about the 54, 78, 79, 80 area. That's where I would expect some weakness. But right now we can't even get above this. Right? This is kind of weak. I mean, we're not even getting above 54.46. So not having a lot of hope for a strong bounce in SPY, honestly. There's your 3-day. We've only bounced into the 3-day. So that's always going to be my baseline bet is that we'll bounce into the 3-day. If we get and stay above the 3-day on a close, then the next target is the 8-day. I'm just not seeing it right now. Very quiet. Very, very quiet. No energy whatsoever. Not even for VIX to move. There's just nothing. Oil is soft. Dollar and, oops, sorry. Yeah, dollar and yields are soft, and we still can't get any momentum for the market. What are they waiting for? Dollar, yields, oil, soft. That is usually rocket fuel. Nothing, nothing. I don't think it's safe yet. Apple coming down to 210 in time. I had that weird little post. I know it was weird a few days ago. And I'm like, I don't like anything about this market. And it was really weird, I'm sure, when you read that, but that's exactly how I felt. When did I post that? It was weird. It's like, I don't think this is safe. And I really, really emphasized that was gut, right? There's a lot of analysis that I can do, macro, intermarket, technical, but that was a pure gut trading call. I said, I don't like this market. Remember that? Yeah, I still see this BABA coming down into 70.5. It's just taken a while. Baidu's just not ready. There's nothing here. It looks like it's still falling. K-Web is still falling. FXI is still falling. There's nothing here. The only one that's really tradable to me is BABA. Short term has potential to fall further. Pretty choppy. You need to add time. That's about it. You've not done any new bottom fishing this week. I'm like, what are you trading? Because honestly, when I have this, nothing. I've got nothing in my scan. This is all US stocks, indices, and ETFs. That's not a glitch. Everything else is working. All my other scans are working. All right, this is everything is fine. There's no problem. I've got no problem. I can go look at Charter. Remember Riley, that's short covering. I can look at all kinds of movement, but there's nothing here that is coming in as a strong, safe trend. Weird. Yeah, no, my scans are not broken. It's just not finding anything. Oh, MHK. That's another value, right? Hold on. I gotta look at that one. Oh, yeah. MHK and Charter. Let's look at those. Beautiful. Look at this consumer cyclical play that just came up off the bottom. Like nobody's business. Right into monthly resistance. All right. What's Charter doing? Look at that. Descending 200. It's going to have a heck of a time holding. Look at these oversold plays. I mean, this is clearly still de-risking in the FANG stocks. That's just, there's nothing here yet. I don't think this is done yet. But you can see railroads popping up from the bottom, BMY, good job with that, but be careful. CNC, another healthcare plan we haven't looked at. Look at that big, huge, bullish engulfing, huge expansion bar, thin play. Mohawk. Look at Mohawk. No, don't like Restoration Hardware. Look at Toll. I mean, this is all that 30-year yield is falling and home builders are rising. Just make hay while the sun shines, because there will be a time where it doesn't stick. But for right now, that theme is working. Anyway, I don't see anything in the oversold plays that I feel comfortable about. And I see nothing, absolutely nothing coming in on my scan. So that's actually a really nice bear trap. Let's see if that holds. If that gets above 956 Deckers, it's kind of, not a great retail theme though, backdrop, but whatever. I'm sorry, there's just not a lot here today. I'm usually, excited about a theme or a stock. And other than some oversold bounces, and by the way, Amazon has been really the strongest of the FANG stocks, no question. Look at HIG. Whoa. All right. Very strong. Yeah. All right, shoes aren't really my thing. EW is an oversold bounce. Not interested. Toll is already a theme. No, there's just garbage. Charter's impressive. I will give it that. That's a. All right, so there's nothing new. How's that? VNO is a REIT, and I mentioned this one with LC, with Rocket, with Coop. All of those are part of my warm summer housing market call, where the move index falls, the 30-year falls, and refinancing expected to pick up. It is very slow to launch, but you know what happens? They launch before they actually deliver the results. It's buy the rumors, sell the news, almost all the time. So that's why these are rising up. That's why that call is still working, because the 30-year is still falling. And I think it's going to fall. And that's what's helping the potential of refinancing. Nothing like 2020 low. No. It's just a theme that I have. It unlocks some of that inventory and such, and they're kind of front running it. I don't see anything else. It's kind of gross. Already did the KRE. Yeah, I think there's not much I can really get excited about. I think it's going to hit its head on 60. Maybe head up to 61.37. Okay. Sorry about that. And then I already did QQQ. I already did. Hey, Namita. Welcome back, my dear. UNH is just stunning, gorgeous, above 553. Right? That's blue skies. Nothing wrong with that. DXCM is busted, done. Bye-bye. Nothing safe about that. Wouldn't even sell puts into that. That's nasty. Yeah, yesterday, the day before, tons and tons of like stuff. APA is not one of my faves, I will admit. It was at one time. I really liked this, but not anymore. If it can stay above 31, okay, but it's still a descending 200 and doesn't have a lot that I can, get excited about. I am very negative on the largest three consumer proxies: Nike, Starbucks, and Disney. I want nothing to do with them. Zero. I think that they're perpetual shorts. Twist, I love that. This is Alexander's pick for bio. Thin, very thin, no options of any interest, but very nice stock. GH, he's doing extremely well with this one. This one was a really, love that, right? Look at that trend. Just from a technical standpoint, and then monthly held, and it's moving slowly but surely. And look at that 200-day. That's what you want. Flattening out. So GH is still very productive. Like. RNA, beautiful. That was that trend line breakout. Stunning. It was recommended at 15. If it could get to 2080 and hold, it could double, and it has. Same thing with that VRNA. It also did the same thing. Beautiful. It's been very productive. If it can hold 18, it can double. It's been working. Look at this fib level that I threw on it. 1618 is where it should digest. It's digesting. Once it's above there, higher, but it's so extended from the mean. Just keep that in mind. Look at the mean. The mean is down here at 18. What happens typically is it needs the 10 needs to catch up to it. So it could stay here for many, many, weeks or months while the 10 catches up. So just be careful. This is a lot. But it's beautiful. Nothing wrong with it. And yes, VKTX is doing really well. And let's just hope it stays above 60-30 and then really triggers. HIMS is working, although I'm negative on it. That's me. And your ENPH, Tim, is like, I think ENPH and TLT probably the best sideways stocks for premium harvesting. Powell is an AI ecosystem play. Big, huge move. I would need to research that one a little bit more. I'd be wary because I need to know more about it. I mean, clearly it came out back down to the February 2024 highs. It needs to hold here. If you're bullish, the problem is it's already crossed over. So the trend is already reversed. So it really has to keep above the 200. It's been digesting for the whole year. February through July. It has to hold here. That's all there is to say. All right, so we're getting a little, digestion on a Friday, but it's not falling apart. That is bullish if it can stay above that 116.5, but it's not in the mood. It's already taken off for the week. And GERN, I don't know this GERN, Andre. Oh, that a biotech? Garon, it is a biotech. Do me a favor, please ask Alexander about this. I know nothing about the science, management, space, balance sheet, nothing. I can see that 349 held and it's moving very well above the 10-week. Looks productive, but thin. Looks productive, but thin. Yeah, I'm not really seeing anything new. I will admit the stuff that has already moved in the warm summer housing market call is doing fine, right? Remember, Joe also had earnings recently. That was one of so that stuff looks good. BABA does not. PDD does not. China plays. Qs look tired, but they haven't fallen apart. I still see 449 and SPX, this 53.76 today, or by maybe FOMC. What do you want? There isn't really anything I've got that is new trend long. I've got zero, except I do like that breakout in HIG. So insurance space has been really, really strong. I still really am, as you know, bearish the 30-year and bullish home builders. A lot of staples. Remember, nothing has interrupted this very, very solid trend of Colgate. Len is also a breakout. Basically, all the, all the housing sector stocks are moving. I really like ABBV, Gilead, and Amgen, but they have been in play for a while. Amgen still is very productive. Those are XLV takes. Sherwin-Williams has done beautifully. I forget who asked about that one, but it looked fabulous as it squeezed above the 55. Beautiful 200. Just, it's been great. So there are definitely plays that had been setting up and have moved higher. ICE is another trend long recently recommended. I know banks are still pushing, and small caps will push with them. IP was also oversold play, digesting 45 beautifully. 3M was oversold play, just took off like a rocket with earnings. Speaking of rockets, RTX, LMT, Northrop, they're all, GD, they're all doing just really well, and stuff that isn't is tech, small, medium, or large. I'm not excited about chasing regionals. Nope, nope, nope. The ones I just mentioned, that's mostly sector rotation though that I just mentioned, right? Yeah. Be careful, I mentioned on gold, silver, and silver still coming into that 24.51 area. And that means be careful with GDX. Do we have any movement? Nope. No, we really don't. Nope, nope, nope. Nope, nothing. All right, so market's really quiet. We had our PCE. We're going to have next, Wednesday, FOMC, but more importantly, I think anyway, QRA, end of month, and non-farm payrolls. Fun times, right? Fun times. Dollar's not falling apart. Yields are just kissing that 4.2. Market soggy, looking for a trigger to move higher. Oil is definitely weak. I've got some intermarket I can show you while we're waiting for paint to dry, but otherwise I don't see a big, I see no momentum. So but that's not anything new, right? I see no momentum at all. I see a strong yen, and I think that's the most important macro right now is a strong yen, and it's being underestimated. So what sectors are leading? Pretty clear. Home builders. And defense. Yeah, that is still leading. Home builders, consumer cyclical sector or consumer defense sector. You've got some in financial services that are really, really, really specifically related to banks. And I'm not excited about that, but it is rising. So I get your excitement. Asset management's different. Insurance is definitely doing well. Asset management is doing well. But and then of course the actual defense contractors are doing well. So I would say that shows you what I just showed you. It's not tech. None of the sector strength or leaders are tech. Nothing. Okay, let me see what's going on over here. Oh, Alexander is in the room. Gern, he has just mentioned, Andre. He said Gern has an approved product for anemia associated with myelodysplastic. So sorry. Myelodysplastic syndrome, a condition where the bone marrow does not properly produce your red blood cells and white blood cells. The condition is many times cancerous. I have not seen the stock do anything since approval. Your HIMS is fine, ENPH is fine. We went over my strongly held opinions about Nike, Disney, and Starbucks and regional banks. I'm so sorry. I got nothing. And China stocks, not ready. Tesla, nope. I mean, not a lot here that I like that I have not already kind of gone over. Okay, let's see. I got trading room comments here. What does that mean? No, she is still with her call. Huh? Arts, I didn't get that. No, she is still with her call. No comprende. Oh, okay. All right, so let me just show a little bit of intermarket so we can get that out of the way, because I meant to do it on Tuesday, and Tuesday and Wednesday became way, way, way too eventful with market action, right? Intensely exciting, shorts of size, and that was just my total focus. So today's a little bit more boring, but I've already gone over what sectors are still leading with some surprises, right? Charter doing a 180. 3M doing a huge, on a monthly anyway, all the way back up to August of 2022. Beautiful, just stunning. Anyway, we definitely have some movers in oversold territory that have lifted. So congrats on that kind of stuff, but otherwise not excited. So let me just get my intermarket out for you. Okay, Brian has a comment before I get my intermarket. He says, I wouldn't get excited about VLO at this level off that 148 that I had the other day, which by the way, did he nail? Oh my God, did he nail? Okay, I still like this though. This is potential, but that's it. 160, and then we have to get and stay above 160. Okay, so Brian says, I expect it needs another week before we know if it will have follow through. I don't trust it. And it hit the underside of resistance that I have for it. Okay, thank you for that, because literally you suggested in the first place. All right, I'll be right back. Let me get my intermarket together. So, can you hear me? Yeah, I turned it back on. I had posted this chart the other day, 2 days ago, said, wouldn't surprise me if we kind of came down, bounced, but I still see 535. Clearly we bounced, right? But we have not come back down to 535. This still looks oversold. It still looks like it's still working on its way lower. We did hit that. Oops, sorry. Duh. Anyway, we did come really close. We hit 547.46, boom, and then we came back down. But we have not reached, right, that 535 area, or let alone my key level, which is this 5376. So I'm still really, really fixated on that. Long story short. Now, from an intermarket standpoint, this was the line I was looking for, 1.95. And as you know, we've gone through it. I mean, this is the line I've been looking for a while. This is not new. And we have gone through it. And we have not based yet enough for me to trust that we're, done. because those levels haven't been targeted either. So I'm still going to be patient. I think we have a little bit more to go. And usually Mondays, VIX gets crushed, but we have Wednesday FOMC. So I think we have a little bit more chance for shake and bake until we get the Fed to come out and tell us what we already know, which is September rate cut. That's really what I think is going to happen. I think they're going to talk accommodation in July, even if they don't have consensus. So long story short, that's my baseline bet. Now, randomly, not randomly, but I created this, and I did talk about that, by the way, weeks and weeks ago. I literally said, I believe FOMC will seriously consider a rate cut. Don't at me. Anyway, this is basically before we get that pop in unemployment rate to 4.2%. So we don't yet have the 10-year really staying below 4.2. We don't have any announcement of unemployment rate, above 4.2, but that's still my baseline bet. That's it. I can't unsee that. We don't have jobless claims above 267,000, which I know you can't see, but is this line. And that would be a lot of volatility that we haven't even experienced yet. But for right now, long story short, market is digesting basically this trend line from November and April. And I think this is a distributive top, but we have to go make one more top, one more high. So at some point, we're going to have a really strong reflexive bounce. We just got to finish going down first. That's in a nutshell. And then I think in time, this massive, whatever this amount is, I read somewhere that this concentration risk in the S&P, and I don't remember honestly if it was the S&P 7, the Mag 7, or if it was Mag 10, but I read somewhere it was like 17 trillion in just those top 7 in market cap. And remember, we've already lost 2 trillion. Crazy, right? We already lost 2 trillion in market cap. And trust me, it didn't all come into here. That's just not how it works. So some of it's just gone. And I still think it has more room to go. So this is going to be a dance likely into the end of the year. I'm not a very bullish person right now. So I'm still waiting for unemployment rate, jobless claims, etc. I'm still waiting for reversion to the mean type of stuff, but not all at once. Hopefully not all at once. That'd be terrible, right? So that's it. And I still think that yen, by the way, it's all the way up here now, right? I mean, it's all the way up here and it's digesting the 200 pretty well, but it is in a protracted downtrend. So if we do get this to pull back, well, right now, the yen to pull back, let me show you, then we could absolutely get that bounce. And I don't see right now the yen pulling back, but oh no, it's very strong. It's very strong. But if we do get the yen to pull back, I can see also that'd be a great timing tool for a market bounce. Does that make sense? Think about yen as that carry trade that is undercurrent, kind of like ballast of a boat. So for right now, we're a little bit, unbalanced. And as this rises up, we need to really, honestly, we need to get ballast back and get this thing back down for the market to move higher. That's kind of a core theme that we've had in play, and it tracks really, really, really well. Lots of other folks are going to be focused on fundamentals, and I'm not as excited about that. I'm going to use my intermarket as a bigger tell. So let me get the other charts together. Yeah, we're still not going anywhere fast, which is okay. There we go. All right, so I got my intermarket that I need to put on 150% size. There we go. Nope, that's too much. That's too little. As we sit here, all right, so I showed this the other day. This is the 2-year yield, it's hard to see it, but you can see this head and shoulder that's kind of starting to form. We're up at the 5.2 area. We've come down. This was taken on this 13th, where I said I think stuff is going to start to soften in the yield complex. At the short end clearly has fallen a lot faster than the longer end, but we're now down to, you know, that 4.5, and 4.2 is a trigger for lower. This is Fed funds rate as we're pricing in, you know, a little bit more cutting cycle. And yes, it can also be a precursor to fears of recession or pulling forward recession, but it's at the core level right now, just giving relief to some of the things that I highlighted earlier, right? Like conditions are tighter, savings rates are depleting, income is softening, credit card delinquencies are increasing with bankruptcies, et cetera. But more to the point of the global credit demand is falling. That's why countries are doing rate cuts. So I think this is going to trigger other countries to follow. So UK, right, ECB, they're close behind, never leading Fed, or, you know, trying to outdub the Fed sometimes, but for the most part, they will follow the Fed for sure. This is that composite NASDAQ one, composite to SPX. And I warned up here, we're right at the neckline of this 2021 high that resulted in a 35% pullback in NASDAQ before major global central bank intervention. Well, we hit it and we've come back. So this is literally just on the 25th, right? Today's the 26th. It's not going to show any difference. And remember, this is a monthly. It's much more compelling to take it on a monthly. But I do like the fact that I grabbed this literally right in the middle of the month, tag year it, and then we started rolling over. And you can see we have not broken the trend. We have not broken the trend. You buy tech in the channel and you short tech at channel breakdown. We have not broken the major trend. And we've got QRA, Yellen's, you know, Yahtzee at month end. We've got FOMC next Wednesday. They love to intervene. So this is not, I think we still have one more high out of this market at least. Yeah, easy money right now that we're going to get a September cut, but now they're increasing the chances that we're going to have a 50 basis point cut in September. How times, you know, change. All right, I've been tracking this growth value rotation. Craig has been tracking correlation, which has been coming up off the bottom very, very firmly. And with it, VIX, that was actually pretty darn well timed on that 9th and 10th. I'm just trying to look for something in particular. We've had our historic moves with the rotation for sure. We've got our trend line tag that we did bounce, but I still see 535. I've got, there it is. I've got this gold minor bullish percent index that looked, you know, like it was going to roll over and then it spiked higher, and now it looks like it's going to roll over again. So I'm still big picture bullish gold, silver miners, but short term, they are coming under some distribution as silver is falling. This is an old chart of BXM. You know what's happened since. It's been really, really broken, but this was a warning that we were going to fall, right? So this is very bullish above zero. And then when it starts to cross over, you can see here, it's done nothing wrong, but it started to cross over and I'm like, now we're going to get some shake and bake. And man, did we. We had some really, really major selling over that, you know, past few days, with NASDAQ falling 3.5% and SPY finally having a 2% drawdown. This was a great tell that it was coming. Anyway, long story short, we have not managed to have VIX go into backwardation, but it's getting close. And typically that's when VIX will get crushed. So it will dip below. And the only time we have really, really protracted backwardation is when we have a major correction, right? Like a 20% pull down, or what happened in COVID, which is 35% pull down, and VIX went absolutely through the roof. But those occurrences are rarer. What is more common is as we come into this zero backwardation, that is when VIX gets crushed and the markets go higher again. That's what I'm looking for. So obviously I have to update all this stuff. but that's just to kind of keep you in the know of what I'm looking for. And we did have a perfect bounce on the this is Aussie yen, but the point is all of them look the same. The euro yen, the Aussie yen, the dollar yen, they all came into a 200-day and then tagged. And that's really kind of liquidation with NASDAQ as well. So the yen getting strength is very bearish, our market. Just keep that basic kind of, all right, I'm gonna follow that. Keep in the back of your mind. So, and I already talked about the jobless claims I'm still looking for. Beautiful. I was really, lucky or good. I said, I don't think we're done going down. And sure enough, now we're below that 1.95 ratio in growth. So this is so far working. And this stock bond volatility ratio that I showed you, let me just show you what it looks like right now. Remember how I said, I know folks are timing the bottom right now. They really, really think the bottom's in. I really, really don't think the bottom's in, right? So it was that kind of deal. This was taken from, it doesn't show you, but this is actually the 22nd. Even if I took it on the 23rd, it actually shows the level from the 22nd because it's an end of day print. Let me show you what that looks like right now. And by the way, this will show not today's, but it will show yesterday's. I know this is confusing, but just give me a second. Where is this? Where is this puppy? There it is. I knew it. Look at this. Look at this. This is going to screw me up. No, I'm going to show you instead of take a picture of it because it's going to screw me up. Look. Okay, remember how I said this is my stock bond volatility ratio? And folks were calling a bottom on the 22nd. I'm like, nope, we're not done. Volatility has not come up here. This red line has to come up here. This is moving higher. This is moving higher. Here's a thumbnail close up. Look at that. Did volatility move higher? Oh, yeah, right? This is what it looks like right now. And again, this is end of day, so ignore the fact that it says the 26th. It's actually just painting a picture of the 25th. It doesn't do real time. It's an only end of day stock charts ratio. Look at this. Now it's above zero. See how this is still moving higher? Still how this is making a double high. Exactly. So this is why I really love these ratio analysis charts. Now, what typically happens is, I've got these cherry-picked indicators, right? So the ratio is actually tagging yesterday. Yesterday, it's tagging the 65. And VIX, you can see it over here, made a high, came back down, made another high. This is typical. I'm waiting for this crossover. I'm looking for this crossover right here, and we're not there. And I actually said, I think we're going to make a double high. It happens. There's no question it happens. So I think we still have a little bit more in volatility before the market is done going down. It'll be good to take an end of day print today. This is true. Oh, what the heck am I? All right. So anyway, that worked. Volatility continued higher and the market continued lower. And I still see that 53.76. Lots of this, was very interesting timing with Dudley and his op-ed, turning from dove to hawk and waiting until September unnecessarily increases the risk of recession. Really. Anyway, McClellan put equity, 21-day weighted equity only put call ratio is another love. Macmillan. I showed this, and sure enough, S means sell, by the way. I was a little bummed I didn't get my MAG 7 ratio tag. I still am, but nonetheless, I can still see potential, right? Potential of after the sell-off getting defended and going and tagging that. I think we still have one more high left in us and just trying to time when that's going to be. And right now we're still not there. This is gold. Remember I said I'm kind of freaked out that this got so protracted and then it bounced back up like a daisy. Gold was it stabilized really, and silver only recently rolled over, but this was a little divergence I'm still worried about. So it hasn't really reconciled. It should be a lot closer is what I'm trying to say. And bonds started going sideways, not a big deal, but I still have a bullish backdrop for bonds. They're not falling apart. Qs, I already did this. This is like old news, right? This is a few days ago where I said I still see us heading down 455 and then 449. We're not done yet. We broke my Copic curve. That was a good little indicator we were weakening. These are kind of old, but I'm just kind of showing you. And here's that trend line for SPY. Excuse me, for NASDAQ composite. We still haven't come down and tagged that perfectly. So we're in this neck of the woods. And this is from the November. And this is NASDAQ composite. And I'll show you that one as well, where we are right now. Hold on. NASDAQ composite. Look at this. This is so funny. That's the one I showed you, right? We were hitting our head on breadth on both of these levels, and that was a trend line tag. I wanted to see that tag. This is where we are right now. We're almost there. Come on. Right? See, we hit our head, came back in, hit our head, came back in. It's bullish above, but we had to pull back first. We're almost there. Look at that. We're so close. Anyway. I'll be bummed if we don't tag it perfectly. That's how I am. I know Tom Lee is saying we're going to, head up 40% by the end of summer. I don't see it. But that's me. Transports looking for some stabilization. This is IYT to SPY when we had a massive COVID crash to 2004 levels. Since then, we've taken out the COVID lows and the 2004 levels. That's just scary. I'm waiting, anticipating to see how we're going to do here. If we're going to have a reflexive bounce, but we haven't had any yet. But I am looking at IYT. Remember, we were looking at oversold value plays within IYT. I'm not crazy about at all. I'm not crazy at all about the jets, but I did like the defense contractors and some of the railroads. So this is one thing I'm still watching for if we're going to get a resumption higher. And let me just update that chart right now, since this is one thing I was looking at. Where's IYT? And this is IYT right here. It hasn't done much. Just hasn't done much. So it's trying. It's still trying. Make sense? I'm still watching, waiting, anticipating. All right, that's all BXM, which we already talked about, was a fabulous tell. And then I have to update a lot of this stuff, right? This is, of course, NYSE. Common stock, new high, new low, pushing higher, pushing higher. It's been in trend since November and it hasn't come back down, unlike NASDAQ. So I am still kind of seeing how extended we get before we go into distribution. But so far, NYSE is obviously the place to be. And fund flows have been bullish. Call volume has been off the charts. And that can be a trend reversal. So, of course, I'm watching Russell relative to NASDAQ returns. We had a massive move like last week. Right? That was historic. And we did have a bunch of Russell flows back in the 1999, 2000, 2001, 2002 area when NASDAQ did its 100% advance and then fell 80%. Okay, so there are some similarities. But for the most, and you can see that the call volume has been also unprecedented. So of course, I'm tracking small cap as it relates to sentiment, option structure, relative to performance, historically, fund flows, not to mention my own intermarket. I'm very, very focused on this quote unquote rotation. The difference, I would say, is they're not selling concentration risk and going into small caps. They're covering short and they're buying small caps, but not anywhere near the amount of market cap that's being liquidated at the MAG 7 level. That money's just not all showing up in small caps. No, there's no way. Small caps would double. So that's just not how it's working. This is an interesting chart. This is Russell versus SPY, and you can see this ratio, which I want to actually recreate, is really at a key inflection point for moving higher. So I still like this idea of things over paper, which is basically companies that are tied to real assets. I haven't updated this for a while. This was a week ago, but nonetheless, the NDX was getting a little soggy, but it hadn't done anything wrong really in size, but there was a divergence, right? We were kind of petering out. Same thing with, same thing with SPY. We couldn't get quite above the 0 line. And then of course we rolled over hard, and NYSE was the strongest outperformer. Anyway, this is just McClellan summation. It shows price over kind of a smoothing trend line. And I use MACD a lot because I like when it gets above 0, it's very, very bullish. And it had not successfully gotten above 0. So we literally got rejected right at this 0. So I'm going to look at this weekend. It's probably going to just show what we expect, which it kind of petered out at the 0 line. And NYSE is struggling, but it's to stay and make new highs, but it's doing a good job. Long story short, it hasn't quite been up the ghost, even if it is very extended from its mean. It's still a divergence that I see underneath with MACD, but it doesn't do anything right now if price doesn't follow. So I'm not worried about it. I'm just kind of highlighting some of the quirkiness of it. All right, we made it through our first kind of heavy week with Tesla and Google, because Netflix I don't think really counts. Sorry. And next week we're going to have the really big earnings, right? With Apple. We got to see the universe that is Apple. Anyway, I will update all the intermarket and show that to you next weekend if I see anything of real importance. But for right now, not a lot. What we have is a little bounce on a Friday afternoon, trying to suck in the bulls before the weekend. I would say it's more likely monetizing those very successful puts for the week and calling it a day and heading out early. It's still a little choppy at best, but if we stay above this 460, it's bullish. We break below 460, it's bearish. And I still think we have some levels to hit before FOMC. Oil is still a little soggy, and Brian also warns, be careful on that VLO bounce. Still has to prove itself. Yields still 4.2. Unemployment rate still below 4.2, and the 2-year yield still above 4.2. So we don't have any major, I think, macro-driven risk yet. In the meantime, I think we did a hell of a job this week. Keep your eyes on the yen, because that is still going to be a good barometer of macro risk. So if the yen stays bid, we're going to have more headwinds than not. If we get a little pullback in the yen, it'll probably be a nice little relief bounce in NASDAQ. Credit spreads are still compressed. Volatility is still suppressed big picture. Like we made it from 12 to 19. Historically, that's still wicked good, right? We're not really in danger zone by any stretch of the imagination. And dollar has not moved. It's still strong relative to others, but it's still not getting in the way right now of equities. This is a totally different thing. This is de-risking. And I really think this is just valuations getting reset, especially as we go into earnings. The AI narrative was already rung, they rang the bell, right? Meaning Barclays and Goldman Sachs and Citibank and Dan Niles and Sequoia saying, yeah, the AI hype is way out of control, and Druckenmiller selling, and they just rang the bell. So we have revaluing some of this concentration risk, and ultimately, I don't think it's done, but I am still waiting, anticipating for a bounce of size. And I'm going to see it when this stops going down and goes sideways and starts to move higher. Right now, it's a mess. There's nothing here. So what am I going to do with that? And big picture, this is what I really, really want to see. Hold on. I really, 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 really want to see is this, right? This was literally the chart. Oops, hold on. Ah, it's going out of view. Whatever. This is definitely what I want to. I don't know how to get this. Come on. Oh my God. Give me a second. Such a pain in the butt. This one right here. This is what I really, really, really want to focus on, is this reversion to the mean from RSP and SPY. And for that, small caps are still going to be very, very strong relative to the concentration risk that is NASDAQ over time. I think we're going to have some mean reversion ahead. In the meantime, have a great weekend. All right. See you Monday. Bye.